Now, the perfect high yield portfolio, at least to me personally, is going to offer a dividend yield that's going to be much higher than the average market. This perfect portfolio is also going to offer dividends on a monthly basis, and it's also going to offer exposure to a somewhat safe underline of assets and a high quality strategy. Now, the perfect high yield portfolio is going to be probably a lot different depending on what type of investor you are, what your risk tolerance are, etc. But in this video, we're going to go over a 4 ETF portfolio that I would consider a perfect high yielding portfolio. Pretty much covers all bases. This 4 ETF portfolio is going to be relatively low beta. It's going to offer a ton of income generation from day one, but along with it, it's going to be tax efficient and the underlying strategies. So if you want to see this 4 ETF portfolio that I think might be the perfect high yield portfolio that covers a lot of the market and offers a ton of income generation, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now the first ETF that I would include in the 4 ETF perfect high yield ETF portfolio would be ticker symbol DIVO, or the Amplify CWP Enhanced Dividend Income ETF. And DIVO is an ETF that I've been holding in my portfolio almost since I started investing. Now it says, why invest in a DIVO? If you guys haven't heard much about this one, it says income potential comprised of high quality dividend oriented stocks along with covered calls and individual stocks. Next it says active management allows the portfolio manager, the CWP, to identify opportunities and risks and act on those decisions in real time. Next it says seeks to lower volatility. Dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. Now, even though DIVO only holds onto a small basket of holdings, a lot of these names are blue chip names that have been around for a while and stocks that have performed very well. But along with that, you aren't necessarily getting one-to-one exposure with these individual stocks because, as you can see right here, there is covered calls deployed on different names throughout different time frames. So even though you're getting exposure to different names that pay dividends and have grown over time, you're also getting some exposure to the cover call overlay, which is going to generate a lot more income than, of course, if it wasn't being used. Now, the objective and strategy, it says DIVO is an actively managed ETF of high quality large cap companies with a history of dividend growth, along with a tactical cover call strategy on individual stocks. DIVO is strategically designed to offer high levels of total return on a risk-adjusted basis. Now, DIVO's distribution rate is almost 5%, so like I said, if you're building out a high-quality, high-yield portfolio, you're going to want to have something that's going to yield, obviously, high yield. And even though 5% isn't necessarily massive when it comes to high yield, it isn't bad whatsoever, especially if you're comparing it to the general markets. Now, looking at DIVO's performance on the max time frame, this is just price performance. This ETF has also grown pretty substantially, which is awesome because, again, it's more of a dividend income focused ETF, but still has grown nicely. DIVO's return on average around 12% per year since inception too. This ETF is absolutely awesome and definitely worth looking into. The next ETF that I would also include in this 4 ETF portfolio, if I was of course solving for a higher yield than average at least, but also wanted a high quality basket of ETFs that offer a good strategy, tax efficiency potentially, and generally low beta and safe. I would also add QDVO, the Amplify CWP Growth and Income ETF. This is also an Amplify ETF which offers a very similar strategy to DIVO. It says growth and high income potential, seeking capital appreciation from growth-oriented stocks with high monthly income from option premiums and dividends. Equity exposure and lower volatility. Covered calls and dividends may help reduce volatility versus the overall market during times of broad-based market declines. Now, a lot of people get confused on what's going to happen to names like QDVO or DIVO during market declines, and even though ETFs like these ones do offer exposure to covered calls and stocks that pay dividends, it doesn't necessarily mean that it's going to be 100% protected, but again, still during times of sell-offs, a lot of times at least names like these ones won't decline as fast. Yield for QDVO is 9%, so you are getting a lot of distribution right off the bat from this one. Now, QDVO is relatively new, it's only been trading for a few months now. And in the max time frame, it's only up around 2%, but keep in mind there's a ton of large cap names in that portfolio that have been dropping like a rock as of recent. The next ETF that I would include in this 4 ETF portfolio if I was building a safe, high yielding portfolio that offers everything that we're talking about, I would definitely add some index exposure, some S&P 500 high income exposure through one of my favorite ETFs, SPYI. Now, this ETF strategy is very, very high quality, one of my favorites across the entire market. It says number one, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. Now, just like any other investor, I can't tell the future, but holding on to something that offers S&P 500 exposure is relatively safe if you ask me. It also says actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options classified as 1256 contracts, which are subject to lower 60/40 tax rates. Now, at times, this fund will also be buying and selling SPX index options, which may provide the opportunity for upside capture in bull markets. Now, this ETF has exploded in popularity over the last year or so. I've been seeing so many dividend investors talk about it. There's over $3 billion in net assets. And that's probably because this ETF offers around a 12% distribution rate. It offers a nice, steady, for the most part, distribution every single month of around 50 cents per share. But along with it, this ETF is relatively low beta. Now, again, because SPYI is a more high income focused ETF, I don't expect this ETF to be growing like a rocket anytime soon, but on the max time frame, the ETF is up around 2%. Now, as of recently, the ETF has dropped along with the rest of the market, but again, with all the income this ETF has paid me as an investor since I started buying it, I'm very, very happy so far with the performance. Now, for me personally, I do look at the index-based ETFs as somewhat of a stable, safer option. Then, of course, ETFs are just buying into a single stock. So the final ETF in the bunch, number 4, is going to be the NEOS NASDAQ 100 High Income ETF, or ticker symbol QQQI. Now, this ETF offers you NASDAQ 100 exposure and does everything the last ETF does, but instead of utilizing the S&P 500, now you're getting some NASDAQ 100 exposure. Now, this ETF has a 14% distribution rate, pace of distributions monthly, and offers tax efficiency, exposure to the NASDAQ 100, which, like I said, is relatively safe if you ask me. Now, the distributions for this ETF is around 60 cents per share per month, which is huge. And if you look at the max time frame, the NEOS NASDAQ 100 High Income ETF is basically traded flat. And there's been times where it's been up significantly, but as of right now, it's trading at a bit of a discount. So there we have it. There's my simple yet effective 4 ETF portfolio that I would build out if I was looking to build out a high yield, high quality, safe portfolio that sort of covers all bases. Now, of course, there's so many different high yielding ETFs across the market as of right now, but for me personally, I like the index-based ETFs that offer you exposure to the NASDAQ 100 and or the S&P. But of course, I dabble in the single stock ones also. But real quick before I go, I do have one last question for you guys down below. When it comes to higher yielding ETFs, what's some of your favorites? Drop the ticker symbols in my comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.